The NASDAQ 100 just finished its best week since March of 2010. Even after 5 bank failures in a looming recession, this is very strange times, but it's all oddly familiar to Lehman Brothers back in 2007, whenever the NASDAQ went up by 35% in the following months. SPY also had a great week, starting at $398.12, going down to a low at $393.69 and capturing all the bears before going back to a high of $409.70 to end this week. So it's been a pretty wild week to say the least, but how did we get here? This all started on Sunday with Fed Kashkari giving a speech saying that the banking situation that we're experiencing right now is bringing the U.S. closer to a recession. And he's one of the very few Fed members who has been calling for a recession instead of pitching the soft landing narrative. He also said that he is undecided on the next rate decision for the May meeting because there's so much time between now and then, so much data to come out, and he's uncertain of whether he should pause interest rates at this next meeting or raise by 25 basis points. And the markets are feeling the same way with a 50-50 shot of 25 basis points or no rate hike for the May meeting. And on Monday, we had a 2-year bond auction where the 2-year yield ended up going above 4% yet again. So yields are rising after no banks ended up going belly up over the weekend. So as long as no banks are having any chaos, then we might see yields continuing to climb back to where they were before. The entire reason why people were piling into the treasury bonds is because they were worried about the banking system. And now if those banking system fears are being diminished week after week, people are going to stop buying into treasuries and the yields will start to go up. Also on Monday, you had First Citizens announcing a buyout of Silicon Valley Bank, one of the failed banks from the last couple of weeks. And this comes in 2 weeks or 3 weeks after SVB ended up failing. So it took a long time for this deal to go through, but the FDIC was looking for the perfect buyer. And also on Monday, you had Fed Barr giving a statement ahead of his testimony in front of Congress saying that they are prepared to bail out any bank, any size, in order to keep the system safe, which is exactly what Fed Yellen was saying last week after she had flip-flopped back and forth of which banks she was willing to support. The ultimate statement coming out of the Fed and the Treasury is that they will bail out any bank that they deem to be systemically risky. So say we have a series of small banks going down of like 3, 4, 5 banks in the coming weeks, then they would probably be willing to bail out those banks after all those failures instead of bailing out just the first bank to go belly up. At least that's my guess. And then on Tuesday, we had the retail inventories coming in at 0.4% positive versus 0.1% last month. And this is disinflationary because whenever inventories are piling up, retailers have to get rid of these inventories that are on their shelves by selling them at a lower price. This is especially apparent in the chip industry where there was an undersupply of chips, a chip shortage, and then that was followed by an oversupply of chips where now the price of chips is starting to come down. So now we're seeing the same thing for retailers with 0.4% retail inventories, which again is disinflationary. And then CB consumer confidence ended up coming in at 104 versus 101 expected, and this is actually up from 103.4 last month. So surprisingly, the consumer is still very confident in the economy, even when things are going south with the banks. But Apple seems to have a different take on how the economy is going after announcing a new buy now, pay later program. So you can finance their phones for 0% interest, very similar to something like Klarna or any of the other buy now, pay later services. So now Apple is introducing their own so people can finally afford to buy new iPhones each year by paying them off in monthly statements instead of just buying it all $1,000 at once. And then on Wednesday, you had a few tech executives, Elon Musk, Steve Wozniak, and Andrew Yang, all calling for a pause in the advancement of AI development for anything that's more advanced than ChatGPT 4. And they're doing this to save society from the burden of AI advancement becoming better than humans and possibly putting people out of work. And then there's also the moral hazard if a company has malintent. They want to curb that. And then Yellen on Wednesday said that the U.S. is working hard in order to counter China's influence. China's been making ties with South Africa. They've been making ties with Russia and even the UAE, forming their own alliance in order to buy goods and oil with those currencies rather than the US dollar, the petrodollar. And the way that the US is working against this is by lending to developing countries, whereas China is actually exporting goods and oil. So we're exporting our debt, and China is actually exporting actual physical goods. And then finally on Wednesday, you had the Swiss National Bank calling for a new UBS CEO. I guess the old one wasn't good enough for them. And then on Thursday, you had Q4 GDP coming in at positive 2.6%, so slower growth than what we saw the quarter before at positive 3.2%. And this missed expectations of 2.7% growth for the fourth quarter of 2022. And then the initial jobless claims ended up coming in at 198,000 versus 191,000 expected, whereas the continuing jobless claims came in at 1,689,000 or 1.689 million versus 1.685 million a week before. So slightly higher uptick in the jobless claims. And then Fed Barkin came out and said that the inflation battle will probably take more time than what is expected, but they are comfortable in hiking rates in 25 basis point increments with an S at the end of that. So that's an interesting statement considering that the Fed is only planning to increase interest rates one more time by the end of this year and then holding those rates at the high levels until the end of the year, which is exactly what Fed Collins said, calling for one more 25 basis point rate hike and holding steady for the remainder of the year. And then finally on Thursday, you had the Fed balance sheet update, which came in $28 billion lower than it did a week before. So I guess the QE period is over after just 2 weeks. But that's only until the next bank failure. Then QE through the roof, right? I guess so. Finally, on Friday, you had Trump indicted for paying porn star Stormy Daniels $130,000 to stay quiet about their sexual encounter. I guess this is what America has come to. And the U.S. personal income came in at 0.3% increase month over month versus spending only went up 0.2%. So it seems like America is finally catching up to the realization that they're probably spending a little bit too much. And then core PCE, the big report of the week, came in at 0.3% month over month versus 4.6%. And then finally, the big report of the week, core PCE, came in at 0.3% month over month and 4.6% year over year versus 0.4% month over month and 4.7% expected year over year. And this is actually down from 0.5% month over month and 4.7% year over year at the last reading in January. After the core PCE, you had Fed Collins coming in and saying that a number of mistakes was made by the Fed and they still face a lot of challenges in banking supervision after the SVB meltdown. And finally, on Friday, you had the Michigan consumer expectations, which actually dropped significantly to 59.2 versus 64.7 a month before, and the consumer sentiment ended up coming down just slightly to 62 versus 63.4 prior. And the inflation expectations also managed its way down from 4.1% to 3.6% as of this month. So the next year, the consumer is only expecting 3.6% inflation, which is along the lines of what the Fed is expecting by the end of the year, according to their summary of economic projections. Finally, the earnings that I was watching this week, I was watching Lulu, which ended up going up by 15.1% this week after posting $4.40 earnings per share and $4.26 expected. And the revenue ended up coming in at $2.77 billion versus $2.7 billion expected revenue for this quarter. And we had analyst price target galore with 100 different analysts coming out with their new price targets. And the consensus now is $394 versus $364 currently. So analysts are expecting Lulu to go up another about 10% from where it's trading right now. And then Micron, on the other hand, ended up dropping by 1.1% this week after coming in with negative 191 earnings per share versus negative 88 cents expected. And their revenue came in at $3.69 billion versus $3.71 billion expected. But AI ended up saving the day after they mentioned it 11 times in their earnings call. But I guess China had to come in and ruin the fun with a cybersecurity probe calling for an inspection of their chips that they're making over in China. So their stock ended up giving up all the gains that it had made after the earnings report, after getting boosted by saying artificial intelligence. And that wraps up the week. Next week, we have ISM Manufacturing PMI coming out at 10 a.m. on Monday, which is expected to be 47.5 versus 47.7 a month before. And Fed Cook is expected to speak at 4:15 p.m. Tuesday, we have the JOLTS job openings, or the number of jobs that are available, which we can compare to how many people are unemployed and see how hot the labor market still is. This is coming out at 10 a.m. And then Fed Cook is scheduled to speak again at 1:30 p.m. along with Fed Rosengren at 1:30. And then Wednesday, you have the ADP non-farm employment change coming out at 8:15, which is expected to come in at 205,000 versus 242,000 the month before. So they're expecting less jobs to be added this month. And then the services PMI is coming out at 9:45 a.m., which is expected to come in at 53.8 versus 53.8 last month. So no change expected for the services PMI, but the ISM non-manufacturing PMI is expected to go lower at 10 a.m. with the expectations at 54.5 versus 55.1 prior. Thursday, you're going to have the jobless claims coming in at 8:30 in the morning, which is expected to come in at 200,000 in initial jobless claims and 1.697 million continuing jobless claims versus 198,000 and 1.689 million the week before. And then the Fed balance sheet is scheduled to see an update at 4:30 p.m. on Thursday. And finally, Friday, it's going to be Good Friday, so the markets are going to be closed for the holiday. But we do have some data coming out, with average hourly earnings coming in at 8:30 in the morning, which is expected to be up 4.3% year over year and 0.3% month over month versus 4.6% and 0.2% prior. And then you have non-farm payrolls coming in at 8:30 in the morning, expected at 238,000 versus 311,000. So this is expected to see a steep decline. And finally, you have the unemployment rate coming out at 8:30 in the morning, which is expected to be at 3.6% versus 3.6% last month. So that's all the big reports that you're getting this week. And then for earnings, I didn't find any of interest. So we're just going to look at technical analysis for SPY. The expected range for SPY this week is between $403.50 to a high of $415.50, with supports at 406, 404.35, and 403.10, and resistance at $410 and $412.35. The RSI finally went above 50, so this is starting to look bullish, but it also looks very similar to what we saw in late January, which was followed by a drop in early February. So we'll see how this all plays out, if this is just a bear market rally or if this is actually a new bull market. Considering that we have a looming recession and earnings are going to be coming down by the end of the year, I think that it's going to be a fake out, but it's hard to time exactly when things are going to start to go south. Probably around the next earnings season, which I believe is going to be in late April. So get ready for it. And that's all I've got for you today. Thanks for making it all the way to the end of this video. Hopefully it was useful. If it was, show some love, leave a like. Thank you to all my channel members and my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.